Hello Oracles. Well, Tesla stock crashes down after the FOMC meeting. So we were discussing it this morning. We were going to rip or were we going to dip? That was the big question. Wasn't really sure what was going to happen. When we got the news from the 75 basis point hike, the entire stock market, Tesla included, started to run up. Jerome Powell came out and started talking. We pushed up even further. We got close to $314. That was right at that level that we were looking to break through. We were not sure if we were going to get through that, waiting for that volume, and then we bounced down. Came back up, bounced down again, and then just continued to crash down. Right after the meeting ended, the entire stock market sold off, Tesla finishing down 2.5%, and the S&P and the Nasdaq were down almost 1.75% each, respectively. Now, before we get too much further into this, I would like to welcome the two newest members to the channel. Thank you 1977 Sith Lord 1, aka Darth Michael, and Russell Singh to the channel as members. Thank you all so much for your support. If you guys would like to become a member yourself, we do have 3 levels, Oracle 1, 2, and 3. I give out awesome perks down in there. I share a lot of different spreadsheets between my price targets, production and delivery numbers, valuation model depending on which level you choose to go with, a bunch of other perks, merchandise discounts that I'm going to have as we come up, and lots of other things that I'm going to be adding over the course of time. We also have a Discord chat and a Patreon. That link is down in the description, and I am over on Twitter at OracleTim1. So just looking at the way the stock moved during the day, I kind of had a feeling once we saw that run up going and we saw those couple of bounces, things that I paid attention to as we were running up. I was literally watching the stock price movement while I was watching the FOMC meeting and Jerome Powell speaking, and I was just watching the entire movements, and I noticed that Tesla was outperforming the market. And then all of a sudden we started to creep up to that 313 level and the whole market continued to move, but Tesla started coming down. So that told me that that 313 was an extremely strong resistance, as it has been all along. This is now the third time we have bounced off of it on the day chart. We bounced off of it at the 940 to 944 mark previously prior to the split. We then hit 313 the other day, and now we hit 313 again and started crashing down. Looking at the upward channel that we were on, based on the fact that we closed at just over $300 today, we have closed below the upward channel that we were on based upon the charts that I drew. I'm going to pay attention to see how we close tomorrow, because if we climb back up into it, maybe my charts were just off a little bit. That's totally possible. But if we continue to fall down further, then we are going to start looking for a new pattern that we are forming. As I said before, the levels that I'm looking at below us are the $300 level that we are at right now. And we have after hours dropped down below that $300 mark. I'll check where we are again pre-market in the morning. But looking at those levels now, if we continue this trend tomorrow, we continue to fall down further. We could hit that 289 partial gap that is still there. Below that is 278 and then 265, gap at 258, gap at 247, and then 245. Those are all the levels that I'm looking at. So again, I'll have those all in description if you guys want to write them all down. But those are just the levels that I'm looking at right now. I don't know if we're going to fall down that far. Maybe we just fill that partial gap at 289 and come back up, and the 258 and the 245 gap never get filled. So just things that I'm paying attention to, things to keep on the radar. So what we were talking about today with the inflation with Jerome Powell is he is still saying that the Fed needs to fight inflation. They are still going to be aggressive with this. They are raising the rates 75 basis points today, and they're looking at a federal funds rate at the end of the year based upon the consensus of all the Fed members is going to be 4.4% at the end of the year. That means that we still need to raise the rates 1.25% over the next 2 FOMC meetings. So we could possibly see another 75 basis point hike in November and then a 50 basis point hike in December. So he did say that, we are still looking at data points. So we still have to look at data points as of right now based upon the data that they currently have. That is the plan. But now if we look at the data points, maybe CPI comes out in October and it's significantly lower. Maybe then they're going to adjust. These are things to pay attention to. So again, we are still on the data point to data point schedule that we've been looking at. This is exactly what the Fed is doing. This is what we need to pay attention to as well. So key pieces to look at for the Fed is going to be CPI, PPI, PCE, and then the jobs reports. Because jobs report right now, the jobs market is still extremely hot. This is something that I was paying attention to and thought about during the whole entire speech that Jerome Powell was giving was when the jobs market is as hot as it is. But we have been seeing that there are major companies right now doing either hiring freezes or layoffs. That tells me that we are looking at a jobs market that is going to slow down in the future, just naturally weaning itself off. There are other situations going on where a lot of people may be leaving their job. We've got to talk about a bunch of people quitting and abandoning their jobs. Well, these people here are leaving and those positions are not getting filled. Now, partially not getting filled because some employers just can't find anybody, but other times they're not getting filled because people are projecting out. These employers are projecting out. We're getting into an earnings recession right now. We could naturally see earnings coming down. If earnings are coming down, that means there's less revenue coming in for these companies to pay their employees. So they are foreseeing this. They're just not hiring anybody to come back in and fill those positions because they're anticipating that they are not going to have as much money to pay for payroll in the future. So this over time is naturally going to run its course, and we are going to end up seeing the jobs market not being as hot. That right now is a big focus that the Fed has. So a big focus for the Fed right now is the supply and demand for both goods and services and for labor. We have a supply and demand issue for both. We have a lot of supply that is needed. There's a high demand for a lot of products that are out there, but still supply chain issues that are going on. At my job, we see some supply chain issues that are alleviating, some that are actually getting worse. So looking at, kind of how you have set up your contracts, like a Tesla, for instance, has set up long-term excellent contracts with their suppliers. And even they are still feeling the results of this. They're still feeling some of the constraints of the bottlenecks from the supply chains. These are some issues that a lot of people are facing, and people who were not prepared are getting hit even harder with it. Then when we get over to the labor side of things, there's a lot of jobs that are out there, but not enough labor to go and fill it. So there's a lot of demand for labor, but not a lot of supply of laborers to fill those jobs. Over time, this is naturally going to work its way out, and that is exactly what the Fed does with their interest rates. They raise the interest rates to kind of encourage that. They're slowing down the economy intentionally. They're intentionally bringing us to a point where we have an earnings recession. They don't really want to get to a recession. It's really about slowing down GDP. Their goals for GDP over the next 2 years are 0.2% growth this year and 1.2% growth next year. Those are well below the median expectations that we normally have, but they have to intentionally slow things down just to let everything balance itself back out again. That's just where we're at right now. Everything is out of whack. We have supply and demand that is out of whack for almost everything. For businesses when it comes to products and materials, for labor, for the housing market. Heck, even the stock market was way off kilter. Even looking back last year, we were basically in a COVID bubble because we had low interest rates and people were just margining the way up and just buying a ton of stocks. And we have now seen that crash happening over the course of the year. So the stock market is starting to find its balance a little bit, but we're still very volatile. And the market is still feeling the effects of the supply and demand issues across the board in all of the other areas. So this is something that the Fed is trying to get under control. So when he was looking at the federal funds rate, the goals that they have for the next 3 years, we are looking for a 4.4% at the end of this year, a 4.6% at the end of 2023, and a 2.9% at the end of 2024. So that tells me that we are expecting a U-turn to be coming in 2024. Because if we're going to go from 4.6% in 2023 to 2.9% at the end of 2024, that is going to be the U-turn. Now just keep in mind, every single time we have seen a bull market begin again, it has been because the Fed has done a U-turn. So just looking at the timing of all of this, worst case scenario based upon what the Fed is seeing right now, if everything plays out as they have planned, we will be seeing a bull market starting again in 2024. Now looking at the fact that Cathie Wood and Elon have been discussing possible deflation coming up, if we end up getting a deflationary measure coming through and inflation drops down significantly faster, we may end up seeing that U-turn happen in 2023. So again, this is just following the data points, see where we're going. If we start to see the data points moving in a direction where the Fed needs to slow down rates, we might see that U-turn coming sooner. This is something I'm going to be paying attention to as we move forward because as soon as I see that signal, don't forget the market usually looks 6 months ahead. So if we see a signal that in 6 months the Fed may end up doing a U-turn, that's the moment I want to buy because that is probably going to be the signal where we are no longer going to go any lower than we are. We may have already seen the bottom. Back in May and June when we hit those lows, that might actually have been the bottom. We won't know for sure, but I know for sure when we see the signs that the Fed is going to U-turn, that means that we will not go any lower, and at that point I will be buying heavier. And no, of course, none of this is financial advice. These are just things that I am seeing myself, so I'm going to be paying attention to this and keeping you guys updated with the insights that I have on all of this all along the way. And so what Jerome Powell did say is Americans can expect pain in the economy. He said it's just going to happen. That's what they have to do in order to fight this. We are going to be expecting job loss. We are going to be expecting higher interest rates. We are going to be expecting high inflation until it gets brought down. So expect the pain. But he did say that we have to deal with the pain now, or the pain would be significantly worse if they did not do anything. So this is their stance on it. Let me know in the comments below if you agree with that or not. My stance is I would like to see it come down in line. And again, we've seen it in the past. If the Fed does tighten too much, they can U-turn. As long as they catch it and U-turn soon enough, it really doesn't cause any irreparable damage. So should be okay. I'm fine with the 75 basis point hike today. And I'll just, not to say I'm going to trust the Fed, but I'll just follow along because there's really nothing I can do about it. I just kind of have to follow and see what the Fed is going to do and make my own investing decisions accordingly. And that brings me to the best line that Jerome Powell had all day, which was, you never want to overreact to one piece of data. And same thing that I've talked about on this channel regularly, especially when we were going through the times when Elon was selling and all these FUD times that we have gone through. You don't want to overreact to anything. You want to take a step back, gather your emotions, and start looking at all of the facts and all of the data points that are out there, because that is what big money preys on, is an overreaction to anything. Because you get an overreaction, they look and say, all right, well, how can we pull those emotional strings to either make you go into FOMO and want to buy more when the stock is already overbought, or how do we get the stock to sell off more and push it down even further and get people to paper hand so that we can bring the stock price lower and buy in even lower. You don't want to overreact to anything. So today we got the 75 basis point hike. It is what it is. All right, how did we react? The stock sold off. We are now coming down. Cool. Now I'm going to pay attention. I may end up buying a little bit extra in the morning depending on how we open, and I'm just going to take a look at these levels. In the past, I used to buy for every percent that we came down. Now I'm going to make my extra buys at the moment at the levels that I had mentioned earlier. So as we come down, I will just add as soon as we get to those levels. The reason being is because those levels could be the levels that we bounce off of and come back up. So we get down to that level. To me, that would be the lowest level we could be at the moment until we break it. So we get to that level, I will buy. If we break below it, I will wait till we get to the next level and I will buy in more when we get there. That's just how I am going to play it. Again, you need to do your own due diligence and research, but those are the levels I am looking at to add with. If we do pull down to that 245 level, I'm dumping in heavy. I don't think we are going to go lower than that. I could be wrong, but if we get that low, that's going to be significant and I'm going to dump and almost go all in with what I have for cash. So let me know in the comments below, how did you guys react today to the FOMC decision? What did you guys do? Did you buy? Did you sell? I know some people I was talking to over on Twitter sold at 310. They were very happy about that as we saw the stock pull down at the end of the day to 300. How do you think we are going to react tomorrow? What are your plans based upon this information? And I want to give a little shout out to Open Skies over on Twitter. Shared out that we had the 4 FOMC meetings this year, and every single one of them, the stock was green and ran up on the day. The entire market went green. The day after, it sold off. So this would be the first time all year long that we were actually red on the day that the Fed raised interest rates. So it will be interesting to see what happens tomorrow. So again, I had been thinking that we were going to see this near-term pullback. I do think that we are going to run going into October. So we may see a pullback for the next week or two. I don't know for sure, but I do think that we are going to pull back, let everything cool off a little bit, and then we're going to run from there. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. If you enjoy these videos and find some value in them, please consider sharing them with others. We do have that membership program down in the pinned comment below. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. I do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a Patreon. That link is also in the description. Thank you so much. Have a great one.